Gold is up more than 80% in the last 2 years, while Bitcoin is down 35% since all-time highs. And I bet you somebody in your life is telling you to buy at least one of them. In today's video, I'm going to rank 20 popular investments from best to worst, and I'm going to do it live on this board. Now, to be clear, we have a certain criteria that we're going to base these rankings off of, and we're basing this ranking off of the average investor and what most people should do. Let's go. Starting off with gold. So gold is a very interesting investment. It's not a great one. Its long-term returns are pretty lackluster, and it is a shiny metal object, quite literally. Now, I like shiny metal objects, and I've literally, I've gone metal detecting. I've done panning for gold. I like the idea of gold. I think it's fun to collect. I think it's fun to, have a little bit of it as literally something to look at. In terms of an investment, it's for the average person, it's just not there. I'm going to give it a C tier because the long-term returns of gold just aren't there. They're pretty poor. If you look at, does it return anything back to you? Does it do anything? No. Most people are going to argue that it's a store of value, and that's probably the best thing that it is. It's a store of value, but then it's also something, if you want actual cash, you have to turn it in for something else. I think a lot of people have a lot of recency bias right now because gold is up a ton in the last 2 years. But if you look at the long-term track record, it's just not there. So for me, I'm going to put it at C, and that's at best. I don't think it's going to be a wealth destroyer or something detrimental to your portfolio. But if you're going to invest it at all, I would put maybe 1 to 5% at most. I think the vast majority of people probably shouldn't own any gold at all. Low cost index funds. So we all know that's an easy S tier. You get diversification, broad market exposure. If you're investing in like a S&P 500 index fund or a world index fund that's low cost, it really is amazing. You're getting great diversification, low fees, and the returns are fairly strong over the long run, of course, depending on which one you're investing in. But broad market, low cost index funds, just the core, the staple of a good portfolio. And really, whether you're just starting out in your 20s, 30s, 40s, or you're, in your 50s, 60s, or 70s in retirement, these are just almost always a strong staple of a good portfolio. Day trading. Day trading is an easy F tier. So we're going the other way now because day trading is one of those things that we know when we look at the research, almost nobody is making money when it comes to day trading. Quite literally, the only people making money day trading are the ones selling courses for day trading. And then maybe a tiny, fraction of a percent that are either actual of skill or just a luck component to it. So day trading, you might as well just go burn your money or something. I think it's probably one of the biggest wastes of time that you can do in terms of time, money, and to your portfolio. And then you also have opportunity costs. So instead of burning that money, what if it was invested into a low cost index fund? So yeah, it's such a thing that has such a grasp on people right now. They want to become day traders. They want to beat the market. I really recommend staying away from that. Next, we have bond index funds. That's interesting. Bond index funds are good for, keeping wealth and for people who want to, earn a good yield on their investments, but aren't looking to, knock it out of the park. For me, I'm going to say that's an easy B tier. Again, it's safe. Usually you get a diversified, large, maybe thousands of bonds in one ticker. And if it's by a good company, if it's reputable and it's investment grade bonds, then I would say it's probably a B tier. A lot of people are going to say, well, you have your stock index funds and then you have your bond index funds. And if you do both of those, that can be a really solid portfolio. And I wouldn't disagree. So if you're somebody who maybe needs some bonds in your portfolio, then that can be a good choice. Just know, you're not, you shouldn't be in like your 20s or your 30s, going crazy in bond index funds. You need stocks so you have something that's going to earn you some money and actually appreciate over time. Bonds is, more about keeping the money you have and just earning a good return. Leveraged ETF. So this one is really interesting because it's going to really depend on what the underlying is of the ETF. I think for most people, though, this is an easy F tier. I mean, if you don't know already, you're basically taking either 2 or 3 times whatever the underlying ticker is. So, say you have an S&P 500 3 times bull ETF. Let's say the S&P 500 is up 1% today. That ticker then should be up 3 times or 3% for the day. Now, it tries to get the daily performance. When you try doing this over a long time period, there's decay issues, not to mention the extreme volatility swings. For most people, they should stay far, far away from these. Now, one caveat I will say to this, I don't actually hate like the 2 times ETFs for like the S&P 500 or like a world ETF. It's if it's by the right provider and it's structured well. But most people, these are just garbage ETFs, and people use them for like day trading, and they're high fee, and that people get knocked out by the volatility. Cash. So cash is interesting because if you hold cash in the long run, you are just absolutely annihilating your portfolio to inflation. And we know that having a little bit of cash for an emergency fund, maybe a little bit in that high yield savings, that is totally okay. And cash today is not detrimental to your portfolio, but you do have to ask yourself, could those dollars been better invested in, the stock market, like a low cost index fund? But as a general, as of today investment, or as a general something to hold for a little bit and, maybe use in the market, that's totally fine. You just want to make sure you're actually deploying those dollars and not letting them sit for too long. And if they are sitting, get at least, around 3.5%, 4% right now. Do not let them sit in cash for too long. But again, be careful of that one, because it's one of those that a lot of people, I think, get really comfortable with, and they don't realize that they're losing a ton of money to inflation and opportunity costs. So we'll give that a B tier. Whole life insurance. So this one's interesting. I'm definitely leaning towards D or F for most people. The reality is, the contracts get complicated, the tax, basis gets complicated. Most people don't actually know what they're invested in. It's really something where the person selling it to you is having a lot better time than you will in the long run. And I would say, though, is it detrimental enough to be like you're day trading? Probably not, because at least you are getting some life insurance out of it. At least you are getting, some very small, usually investment gain out of it. But whole life insurance is a bad product, and I don't recommend it for just about anybody. So that one is definitely D tier, could probably be F tier for a lot of people too. And unfortunately, this is one of those things that a lot of people have, and they don't actually know how they work. So again, poorly structured, not very favorable tax wise, and anybody telling you it's tax-free growth, tax-free withdrawals usually doesn't know what they're talking about and doesn't understand the tax implications of a MEC, which is a whole life insurance policy gone wrong. So yeah, D tier at best. Dividend stocks. Dividend stocks is interesting because there's benefits behaviorally, because people like to see like an income stream coming in from those dividend payments. And that can be useful for some people, in retirement, or just the psychology of investing, where maybe it can help dampen volatility a little bit. And so seeing some income coming to them it seems like a good thing, since there are some psychological, benefits to it. And again, it's still something where, you're investing in a stock. At least you're not, throwing money away into like a complicated mess or something. I'm going to put that in B tier. I'll put it right in the middle between cash and index funds for now, or bond index funds. But again, we'll have to maybe rearrange that one later on. Annuities. So annuities, again, this is going to really come down to what type of annuity are we talking about? Are we talking a fixed annuity? Are we talking a variable annuity? Are we talking an indexed, annuity? There's so many different flavors out there. For most people, they are going to get, kind of, there's a saying, you're not buying an annuity, you're sold an annuity. And it kind of just reminds me of whole life insurance policies, in the sense that these are usually products that people don't understand, high fees. They get pushed on to people that don't have a high sophistication on these investments. So for me personally, although they can work in some cases, it's probably going to land around D tier. You could make an argument maybe for C tier, but again, I think annuities is probably maybe one step ahead of a whole life policy. It's really going to depend on the structure there, though. But for most people, yeah, I don't see it. Bitcoin is such a controversial one. You're gonna have people saying this is one of the best investments ever. It's digital gold. It's scarce, and again, I don't hate Bitcoin or anything, but when we're talking the average investor, most people can't handle that volatility, and it's still internet money at the end of the day, and we are basing it off future adaptation that's going to keep growing. But I do like that it has like built-in scarcity, and again, I don't hate crypto or anything entirely, but for most people, it is going to have to be D tier. And again, in terms of crypto, it's definitely the top dog, and there's some other ones that aren't very good. But yeah, for most people, I think owning stocks in general, index funds is just so much better. Individual stocks. So this is one that I see so many people just getting in trouble with because everyone's trying to pick stocks and be a stock picker, trying to find the next Apple, the next Nvidia. The reality is a very small handful of stocks create a lot of the wealth in the stock market. And that's why low cost index funds work so well, is that those naturally, as those companies get bigger, they take up a bigger portion of the indexes. So I don't hate it enough where it's going to be D tier just for the fact that at least you're owning stocks. But I really do think a lot of people kind of gamble their money away because they think they can pick the next Nvidia, 10 years in advance, or Apple. And the reality is, even if you did pick it, I doubt that person would be able to hold 70, 80, 90% drawdowns and volatility, or the stock just does nothing for years. So I'm going to say C tier, and that's probably at best. Oh boy, we got options trading. Again, this is one of those where you're going to get sold a course on how to options trade. And the vast majority of people should stay far, far away from options. That's an easy F tier. I mean, retail investors burn probably billions of dollars a year just throwing away money. And yes, you can find people out there who bought a 0-day expiration option and they made, millions of dollars by just gambling or lottery ticking their way in. That's survivorship bias. You're not seeing all of the other ones that are just expiring worthless, making no money. And again, I would stay far, far away from that. Now, options trading, of course, can be a bit more sophisticated. If it's used correctly, it can be a hedge in certain circumstances, and you can do some more, complicated things that are less risky and have an actual strategy behind them. But oftentimes, that's what people are just trying to get sold on from like a course peddler. I would just stay away from options trading. Primary residence. Oof, this one might get me in trouble here. So I actually just did a video on renting versus buying. And I can tell you right now, homes are not good investments. You have costs to buy them, you have costs to sell them, you have maintenance, taxes, insurance. There's a lot of hidden cost. With that being said, it's still a forced savings vehicle for a lot of folks, and that is a good thing. There are some tax benefits as well, so we don't want to undermine that. But in terms of an investment, it's really not there. I would say use it as a lifestyle, consumption, and don't use it as an investment. But a lot of people think it's a good investment. It's really, when you compare it to like, a low cost index fund, it gets just annihilated. But again, still some benefits to it. And as a lifestyle thing, it can be amazing. It might make you maybe a lot happier, maybe for your family, maybe for you personally. That's a whole different topic. But as an investment, for most people, it is C tier. Target date funds. So I personally really like target date funds. Basically, what a target date fund does, it's almost like a glide path. It's going to ask you, hey, when are you going to retire? And it's going to create a glide path and adjust your asset allocation from, say, more stock heavy to maybe more into bonds as you get closer to things like retirement. That's a very simplistic version. So the benefit of this is that you get to have almost an automatic asset allocation done for you. And that's really awesome. And it does usually a pretty good job. For me, it's A tier. The one thing to watch out for is target date funds. Sometimes there's a lot more expensive ones. If this said target date index fund, this would be an S tier. but it says just target date funds. So for most investors, I would say look for the low cost target date funds. So you get the benefits of a target date fund and the low cost index fund. It's very nice. So overall though, A tier, really, really good investment. Meme coins. Okay, so do I even have to say that's obviously an easy F tier? Probably the absolute lowest on this list. Meme coins, altcoins, it just isn't there, guys. If you're going to invest in crypto, Bitcoin, things like that, like the top dog is one thing, but to invest in meme coins, we've all seen the guy invest in Dogecoin, he made millions of dollars or whatever. That's one dude out of millions of people. Most people just lose a ton of money on these. Extreme volatility, lack of really any regulation. It's a complete Wild West out there. Stay far away from meme coins, unless you want to throw money away, then go ahead. Next, we have small business. Okay, this one's tough because this is going to depend so much on the person. For the average person, owning a business can be one of the most amazing experiences, and you can earn much more than an index fund is going to provide for you. You're talking hundreds, thousands, if not more, in a percent return if it actually works out well. The problem is not all work out well. I think it's like 50% of businesses go out in the first 5 years, so if not more. So this is a tough one. I'm going to put B tier. I think it can work if you do it well. And, obviously it can be such an amazing, venture you go on, one that, lasts your whole life and you build a remarkable journey with it. But at the same time, it could be something that's, illiquid. You pour a bunch of money into it and it goes nowhere. So that one is tough to rate. I'll put B tier to be nice, but probably C or B. Next, we have rental property. So rental properties are tough to rate too because, there's a lot of great things that can come from taxes, income from them. But then there also, can be a full-time job unless, you're paying a manager or like a managing company. So for me to rate that is tough. I'm probably leaning towards a B or C tier. I like it more than like gold and things like that. But for the average investor, should they be investing in rental properties? I'm not sure. That one's tough to say. Let's put it in B tier, and that's being generous possibly. You might build an empire, and you also might waste a lot of time and energy with a rental property. I think you really got to do your homework. Work with maybe like a mentor or somebody who's really experienced in it in your area, who knows that market really well. But yeah, obviously it can be an amazing thing if it's done correctly. Skills and education. So again, this one could be a little controversial because, some people look at this and think you go to college, you spend a bunch of money, and you get, some people would say, a worthless degree. Well, I think the research has shown that, getting a degree, if you do it in a good fashioned way, is one of the best investments that you can make. Has a direct, impact on your income, and your income is can affect how much you can invest. And those two things together is a wealth engine. So for me, it's S tier. I think that, you could argue it's probably the number one on this list. But at the same time, you could also really mess it up poorly if you spend hundreds of thousands of dollars on a degree that's not very useful. So if you do it in a smart way though, I think investing in yourself, your education, certifications, whether it's, you're getting a master's degree, doctorate degree, you're doing vocational training, whatever it is, I really think that is an S tier. So the one warning I'll say is watch out for people who are trying to sell you courses on skills and education. That probably is a waste of money. I would stick to, actually accredited, degrees and certifications. Next, we have REITs. So a REIT is a real estate investment trust, and basically it's like a pool of rental properties and different real estate properties that's managed by this company. I think you have to pay at least 90% of your income from the investment properties for it to be considered a REIT to the shareholders. And they're actually not bad investments. I don't know, probably not A tier, but I would put them a solid B tier. The investments, the returns are pretty, solid. and pretty on track with the broader stock market. It's just a lot more niche, so I wouldn't have it, be a core foundation of your portfolio, but I don't hate them. And compared to actually owning the physical property, you don't have to worry about maintenance and somebody calling at 2 a.m. that their house or their apartment's on fire. So a lot of good benefits in REITs, but again, I don't think they're a core foundation of a portfolio. And last but not least, we have gambling, obviously an easy F tier. Is it below meme coins? Oof. Oh, that's almost, I would say meme coins is probably the worst one on here. I really do. I think with gambling, at least you got some chance of winning something, but with meme coins, oof, you are just completely, it's like buying a lottery ticket where there's a 1% chance of winning. At least if you go buy like a scratch lottery ticket, usually it's like a 1 in 3, 1 in 4, 1 in 5 chance of winning, a couple bucks or something, right? So yeah, gambling, obviously F tier, and that includes sports gambling, things like that. That's really snuck its way into society. And I think a lot of people, especially young people, are just losing millions of dollars over their lifetime in opportunity cost. So yeah, easy F tier. So let's do one quick final check on my tier list here. Just run it through rapid fire just to make sure everything's placed correctly. S tier, skills and education, low cost index funds. Love it, do it. A tier, target date funds. Awesome. B tier, we got REITs, bond index funds, dividend stocks, cash, rental property, small business. You could probably move cash like the back of this list. Small business, could be moved up depending on what's going on. But overall, you could argue switching those around a little bit, but I think they're all B tier. C tier, we got gold, individual stocks, and primary residence. I think gold probably is in the middle. Primary residence probably in the front. Let me move. Yeah, individual stocks probably at the back of that C tier. But again, you could argue a lot of these either way. But yeah, primary residence for most people, probably the top of C tier. D tier, Bitcoin, annuities, whole life. I think that's defensible. F tier, leveraged ETFs, day trading, options trading, gambling, and meme coins. There you go. That's my tier list. I'm sure you'll let me know where I'm wrong in the comments below, but thank you for making it this far in the video. Subscribe if you're not, and I'll catch you in the next video.